We have buy side here, smooth, relative equal highs, smooth, relative equal highs, breaks, order block, trades back to it here, sells off, trades into our imbalance, digs in to the lower end, which is the opening price on the down close candle on the daily chart, which is the bullish order block. This is the high of the daily bullish order block. Okay, so that way, go back through this video a couple times. I promise I won't go too long with it, but this level is the opening price on the daily chart, down candle, at the beginning of the discussion for NASDAQ. We trade down into it, taking out sell side here, and then trades higher, trades back down into a fair value gap after sell side's been taken, and a higher time frame order block has been traded to. The market rallies, trades above a short-term high, so now we have a shift in market structure. Fair value gap here, trades down into consequent encroachment between the candle's low and the candle's high here. Midpoint is here, and we have a bullish breaker. So we have low, high, lower low, take the body of the candle, uppermost candle, extend it forward. Okay, you're doing it with the up close candle, not the down close candle when you're using bullish breakers. Extend it through. You can see we're finding some support in here, consequent encroachment, and you want to see gaps like that in this stay open. It would promote the idea that you may be seeing a breakaway gap. Market rallies back up into last up close candle. This would be a breaker by any other definition, but because we are elongated from that high, in other words, it keeps stretching further. When we trade back to it and above it, it's mitigation. Okay, so what's being mitigated here? Any trader that's offside that was going long in here, they can mitigate that trade here. Order blocks and candles are not mitigating. Okay, I see a lot of people using the word a lot, excessively. Mitigation and mitigating is the action of the trader that is offside. Order blocks and candles are not mitigating anything. Price is allowing the trader to mitigate their offside position, mitigating potential drawdown, limiting it or removing it altogether. So that was the function of mitigation. Trades down to it here. Also, we have a buy side imbalance, sell side inefficiency. This candle's high, this candle's low. We dip into that partially. It's supporting. Why didn't it go all the way come down to this level here? Because of the mitigation block. Leaves some of that open. Expect it to be institutional order flow entry drill, which is a partial entry to a fair value gap before resuming higher. The market reaches up into the buy side liquidity here. Creates a bullish order block. Trades down into it here. Rallies, fair value gap, consolidates, accumulates more long positions, and then rallies away. What level is this accumulating longs at? At the high of the daily bullish order block wick. And down here is the daily order block opening price. So this is the high wick area of it. And then we have market rally up, order block retest here, and continues to move higher. Afternoon session on NASDAQ, dropping into still the 2-minute chart. New York lunch begins and ends. Here's that run from the order block, and then the fair value gap rallying around the high of that daily bullish order block, wick high. Rallies, order block, as I mentioned before we transitioned into the PM session slide here. Another institutional order flow entry drill right there. I don't have that noted, I apologize. Fair value gap with an order block, trades into it here. Rallies, order block cut through candles, folks. Bullish order block rallies, another order block, 1, 2, 3. Why do I only use this one candle here, and why do I use all of these here? Because all of these candles here are going against order flow. Order flow is bullish. So if there's a series of down close candles and we rally through it strongly like we do here, go back to that original high candle, extend it forward. We have an imbalance, yes. We have a potential order block here, but I'm not interested in that one. Why? Because the candle's body on this one goes lower than that one. There's rules, there's levels to all this, folks. The market drops into the order block, accumulates, rallies again, small little fair value gap in here between this candle's high and this candle's low, extend it through, accumulates longs here, 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 and then once more over here. Why? Because it needs to go higher. In that last hour trading, the macro runs from 3 o'clock to 4 o'clock. Trades down to the order block. Everyone thinks the high's in place. Pumps it through. Clears out buy side.